Hey guys, welcome back, and this is Dan Frio of the Mortgage Update, and I'm a mortgage broker in Chicago, Illinois, have been for 30 years now, and one of the biggest questions I get when people call me, they get pre-approved, then they go out and find a home, and right now it's happening fast, houses are going quick. They get a house under contract, and then the first question, and I even advise them, I know this is going to be your question, but the first question out of their mouth as soon as they get the contract accepted, how much am I going to need at the closing? How much am I going to need, when it's all said and done? So it's hard for me to explain in details, especially at the beginning, but that basically this is what we're going to go through today. How much money you're going to need if you're buying a home. So if you like this video or you like a lot of the other videos that I have, please don't forget to click down below, click the subscribe now button, and also click the bell button over to the side. So whenever I do post a new video, you'll get an alert and you can check it out, send it to friends, family, neighbors, whoever you think might be able to get some use out of it. And what I try to do is give you practical information when you're looking for a house, a real estate mortgage loan. If you're looking to buy a house, refinance a home, things like that, I can answer those questions for you. And that's why I have almost 200 videos out there to explain a lot of these areas that cause a lot of confusion. So if there's anything you want me to address, please put in the comments down below. I'd like to address any questions that you have. But mainly I do these videos when I get the same question over and over and over. I don't know why I didn't do this a long time ago, this one. But here we go. So this particular scenario we're going to go through, it's going to be an FHA loan. Why I explained it this way is just, to make it as simple as I can. There's a whole bunch of other programs out there, and I have a new video coming out probably the end of this week about down payment assistance programs. There's about 5 of them that I offer, and they're hot. But I'll go over that at that time. So right here, what we're going over here is the maximum loan to value, the LTV. LTV, what that is a loan to the value of the property. So in this case, you can get a loan amount of 96.5% of the value of the home. So basically what that's telling you is you need 3.5% of a down payment. Now these are the FHA guidelines, and if you want to check out some of my other videos in regards to FHA and overlays and things like that, please check them out, because you can get an FHA loan down to a 500 credit score. You need 10% down, but as soon as you hit 580, you only need 3.5% down. So that's going over this scenario. So again, we're going with an FHA scenario with 3.5% of a down payment. So this is my handwriting, so I try to make it as clear as I can. I write kind of sloppy, but I tried the best that I could. Okay, so how much do I need if you're buying a $200,000 home and it's an FHA loan? Okay, there's really 2 buckets. Here's how I explain it. There's 2 buckets. How much we have to show that you have, and how much are you really going to need at the closing? Those numbers vary hugely, and you'll see when we get down to the bottom of this. And what I do is I will work with your realtor directly and kind of walk them through scenarios in this, such as this, to help get that money that you need at the closing as low as we can possibly get it. So there are programs out there, especially in the state of Illinois. It's called IDA, and I'll go over that with you in one of the next slides to say, to realtors, that's not always the best scenario for your clients. So, okay, let's get back to this. What do we have to show that you have? That'll be our first bucket. We have to show, remember, we're going with an FHA loan that requires 3.5% of a down payment. So we have to show, based on FHA guidelines, that you have 3.5% of the $200,000. That comes to $7,000. You have to have that in the bank or the availability to get it as a gift. It cannot be a loan. You can't borrow it. You can't take a credit card advance. You can't ask somebody to lend you that money. It needs to be a gift if you don't have that amount of money. But it could, 100% of this can be gifted to you from your parents, relatives, people like that. So that's what we have to show. So you need to show that you have that. Let's go over to the next bucket. Here's what we need at the closing. So let's start adding these items up. $200,000 at 3.5%. You need $7,000 as your down payment. You're going to have title fees, and I put E here as an estimate, and E here as an estimate there as well. You're going to need title fees. Those are all what I explain is the legal side of the equation. There's the mortgage side of the equation, and then the legal side of the equation. That's your title insurance and your attorney fee and things like that. So I'm going to use an estimate of $2,800, and that's probably fairly close. And then escrow, you have to set up a tax and insurance escrow. And I have other videos to explain that to you. So we add all this up, and it's now saying we need $11,800. Wow. That's a lot of money. That's a lot more than the 3.5% that we thought we needed. However, here's what I'm going to help you do. I'm going to work with your realtor, and we're going to go and ask the seller. We're going to say, Mr. or Mrs. Seller, we're going to ask you for a credit. It's basically a rebate check. Think of a rebate check at the closing that's going to move over and start paying some of these bills for us. So we're going to say, Mr. or Mrs. Seller, we're going to ask you for a $4,000 seller credit, and it will be on your contract. It is 100% legal, and your attorney will review your contract and even say it's okay. So we got that. So let's say now we have a seller credit of $4,000. You're going to get a tax proration. So in Illinois, our taxes, real estate taxes, are always 1 year behind. And I'll have another video explaining tax prorations, but you will get a tax credit on the property for the real estate taxes. And it's usually about let's say on average, about 6 months worth of taxes on that property. So in this case, we're saying we need $2,000. And why I'm saying that is because our escrow, it usually matches pretty much to what you need to set up in your escrow. So that's going to be, you're going to get a $2,000 credit. All right. In most cases, I can get us a lender credit of up to about 1% of the loan amount. So in this case, we're going to work on getting you a lender credit for $1,964. And then in this case, in most cases, they're going to want earnest money. So you put down $2,000. So that is your cash in the game. Okay, so $2,000. So now we got the seller credit, $4,000, tax proration, $2,000, lender credit, $1,964, and your earnest money for $2,000. That now equals $9,964. Okay, so those are your credits and how much money you put down. So now we're going to go over here, and we took that $11,000. This is the total of all these costs here. Your down payment, your title fees, and your escrow setup. You might be saying, well, where's all my other fees? If you use me, I'm a mortgage broker again in the Chicagoland area. We don't charge you a fee. The only fee you'll probably have for the loan portion of this transaction is the appraisal fee, and you pay that at the time of the appraisal, and we charge you whatever the credit report costs, and that's usually maybe $50. So it was kind of irrelevant in this case. $50 on a $200,000 deal, I didn't even add it in here, but those are our costs if you use a mortgage broker such as myself. So we got credits of $9,964, costs of $11,800. You take it here. How much you need at closing? $1,800. So you got your $1,800 plus your $2,000 in earnest money. You got $3,800. That's about half of what you needed to show. So that is kind of a little trick of the trade that I can help your realtor with. If you're a realtor watching this and you're like, wow, that's pretty cool. My lenders won't do this. They also charge a lot of fees and things like that to really bump up this bottom line. I'd love to help. Here's just recently I was doing a loan or competing against a company for a client. And he was getting a loan through a company, and he was getting a grant for $5,000 to help him drive down this portion here. So when it came back, I was getting him this is pretty much the scenario that we had. I was getting him a lender credit of $1,964. And he's like, Dan, well, the other place is giving me $5,000. Okay, well, let's analyze this. So here's the competitive bid that he got. I'm just going to go into this section right here. That's it. He is paying, or he was going to pay, $3,427 to get a $5,000 grant. These are all fees that we don't have. So I came back to him and I said, well, you're better off with my loan because, you still even net more money with my loan than this $5,000 grant. So please watch out for the costs involved. And that's why I wanted to go back to you and say, the only cost you're going to have in most cases with me is the appraisal fee. And you have that as here as well. And the credit report fee. And they're not showing it on here, but I would assume that they're going to charge that to you. I mean, they've charged everything else. So it might be in part of these doc prep fees and the origination fee, whatever that is, processing fee. It's in here somewhere. So you got an underwriting fee that you won't have with me, processing, origination, funding, document prep, compliance, all this stuff that basically is fluff, about $3,500 in cost there. So that's basically, again, we need to show how much you need to show when you're buying a property like this. And if you don't have the $7,000, you can't buy the house. Even though you only need to bring $1,800 to closing, you have to meet this section right here. You have to have the $7,000 or, in essence, the 3.5% of the down payment. So I hope that explains to you, on how much you really need when you're purchasing a home. So again, I hope you like this video. If you'd like to reach out to me to see if I can help or work with you, your realtor, if you have another person that you know at work, family members, have any kids or something like that are really struggling. They're looking to buy a house. They don't have a ton of money to put down. I can help them kind of wiggle that number down as low as we possibly can. So the best way to get in touch with me is you can check me out at themortgageupdate.net. And on there is links to my YouTube channel and a whole bunch of other things, Facebook and everything else via social media. You can reach me directly, and I will be the one answering the phone. It's 630-338-1160. And you can also hear me on AM 1160 every day. And I'm live weekdays at 5:20 p.m. So if you're driving home and you want to tune in to the question of the day, I'd love for you to listen. And again, you can get me at themortgageupdate.net. Love to hear from you. Please don't forget to subscribe below. And if you have any comments, please put them down below. If you want to reach me directly, you can reach me at Dan.Frio, Frio, @gmail.com. Thank you. God bless. Have a great day.